In just 60 minutes, I'll go over my full daily trading plan and routine that made me profitable. I'll go over all the details that you might need from the moment I opened the chart, as well as an example of a trade that I took using the same trading plan. If you are not willing to spend 60 minutes of your time to understand how to make money off trading, then you're not really serious about trading. Anyway, let's get into it. So we're going to be starting with the whole daily routine and the trading plan. As you can see, this is everything I look at every day when I started my trading session. So the first thing we do here is keeping it simple and sticking to the plan. And why is that? Because when you have no trading plan, what you're going to do is come to the chart and literally see nothing. Why? Because all you see is confusion. All you see is everything together. And there's nothing specific that you can focus on and execute based on. That's why we need a trading plan. It clears the confusion. That's the first thing. So you see no confusion. The second thing is it tells you when to pull the trigger, right? So we understand that when this happens, we do this. When we have this, we do this. If then, right? That's why we need a trading plan. Otherwise, if you have a discretionary way of trading where you go and then do whatever the market offers you, it might work for some people, but not everyone. And now the main goal of the whole trading plan is to be catching the expansion of the daily candle. So we understand that we have a big daily candle and I'll be executing on the 15-minute time frame. So that's why I need to be involved with the 4-hour and the daily candle. And I really want to catch the major part of the daily candle. So now what we're going to do first is look at the time-based levels and then go over the POIs and then go over the time frame alignment. Now, how about we start with the time frame alignment so we have understanding of the other two sections here. So time frame alignment, we can pick two time frames to trade off for the day. You could go weekly 4-hour, daily 1 hour, 1 hour 5 minutes, or 15-minute 1 minute. Now when you go from up to down, the frequency goes higher and you go to a lower time frame, so you have more trades here and it takes less time for the trades to reach the take profit. Here you're more as a swing traders. The time frame that I'll be picking for today's trading plan and for my trading plan and for my real routine is the 4-hour 15 minutes. So this is my time frame alignment, the two time frames I use. Now what we're going to be doing first is go to the time-based level. So there are specific levels on the chart that I'll be marking every day and it's going to give me an indication of something. So the first one is the midnight open. That's a very important level. So we're going to be marking the midnight open level here, the opening price of this candle, the midnight candle. We're going to be marking that, drag it to the right, and then see if we have price above this level, we go short, and if price below, we go long. And it's not always the case. Like not every time I would go short just blindly above and long below. No, we need to have some confluences with this, but it's a filter to look at the end. So you have your trading opportunity, then you make sure that you're in the right zone and the right spot. Then you look for the minute open and see, are you above or below? And then if you are looking for shorts, then maybe look for shorts above the opening price. Now same thing also applies for the daily candle open. It opens at 17 EST. That's the opening price. We mark the opening price and we apply the same logic here. Now the most important level, or in this case it's a range and it's a whole framework, there is a whole strategy just around this, and it's one of the most popular trading plans and strategies that I uploaded on my YouTube, and most of people on Discord actually follows this. So we're going to be marking the Asian range. It's the price action, the highest high and the lowest low in this time between 20 EST to midnight EST. The range from those times, right, the highest high and the lowest low, we mark that and we look at this because it's a whole framework. So the first thing is, do we have a reaction of a higher time frame level? That's when it comes to the Asian range. If the Asian range high, for example, reacted of a higher time frame level and then it drops lower, then that means there's already a reaction, a big one, and mostly it was followed by a market section shift. Then we look for continuation based on that. So if we got reaction at a high and then we broke lower, continuation means that we're going to be looking for more short opportunities. And two ways we can look for continuation. One of them is OTE, optimal trading entry. So simply we're going to be applying a Fibonacci at that price range. and then look for reaction of any of the fib levels. Or the other option is looking for a PD array. So if we have a fair value gap that is part of the Asian range, and we already had a reaction of a higher time frame level, we can look for continuation from there. Now, the other scenario is we have no reaction of a higher time frame level, and there is a major liquidity above or below the Asian range. In this case, what we look for instead of continuation, we actually look for reversal, and we look for manipulation, which is a liquidity sweep above or below the Asian range, and then we enter from. And the same logic applies, because again, Asian range is a whole framework. What we do after the manipulation or the liquidity sweep, we apply the same logic here. Price below the Asian range, then we look for long. Price above the Asian range, we most likely look for shorts. So that's the first thing. The time-based levels, you should always have those levels in your chart every day. They're going to give you a framework, what you do above that level and below that level. Now we're going to go to POIs. Now this is, it doesn't really matter. You can do it any time frame, but I do suggest looking at this on the 15-minute. It's much more clear. When it comes to the POIs, that's the other thing that I do. Now again, based on the time frame alignment that we discussed, I'm going to go 4 hour and 15-minute. But you can adjust it your own way. You can adjust the time frame alignment. So maybe go 15-minute and 1 minute. It's going to be the same trading plan. Now 4 hour plus or minus means that, sometime I could go to 1 hour. If there is something that is more clear, I'll go 1 hour. Same thing for the 15-minute. Maybe I could go to 5 minutes, right? Or 30 minutes if there is a more clear picture. So on the 4 hour, what I'm going to do is only look for those 4 things. Now that doesn't mean that you're only limited to those PD arrays or those POIs. No, you can actually look for whatever you want. But for me, because this is my trading routine, I look for balanced price range, which are, if you are not familiar with, 2 fair value gaps overlapping with each other. And I have a full video about this. We also look for fair value gaps, and I do focus on high probability fair value gaps. Maybe I'll do a video about this, but I already have multiple videos about high probability fair value gaps, so make sure to watch that. I don't just go with any fair value gap. We also have order blocks, and I focus on up close and down close candles, because those are very high probability POIs, and it can actually have a reversal from those order blocks. And then finally, what I look for is just a quick picture about the recent structure. So do we have a recent breakout structure that is clear? If we have, then we can identify what? The trend. Now, if we have also a market structure shift, it's also going to identify the trend for us. How we're going to approach that is we always follow the recent breakout structure or the recent market structure shift. And most likely that's the trend for the day. Now, you see, after looking at those 4 hour POIs, we go to 15-minute. And 15-minute here means that the reaction of any of those PD arrays or POIs. So any reaction or price goes inside of any of those, we go to 15-minute time frame. And what we look for is a confirmation. Now, just simply price reaching that level, it doesn't mean that we trade immediately, but what we do is wait for confirmation. Now, we have 2 types of confirmation. First one is the creation of fair value gap. So simply all I want to see is price creating a fair value gap of that 4 hour fair value gap or PPR or any of the other PD arrays. The other confirmation is the change in state delivery, which is basically engulfing the last bullish or bearish candle. And that's the creation of an order block. Now, what if I say that this is all I look for? This is the whole trading plan and the whole trading routine that I do every day that made me profitable. Keeping it simple, that's how you succeed in trading. You don't want to learn a lot of stuff but not master one thing. How it's going to end is the same as learning, for example, 5 words from 50 languages. Are you mastering any of those languages? Not really. The same with trading. When you focus on one trading plan, one concept, one trading strategy, then you'll be able to make money off trading. You're not going to have that confusion. However, if you know multiple concepts, right, and you're not mastering any of those, you go to the chart, you cannot use any of those to make money because you're not mastering any. In order to make money, you need to master a specific concept and be good at it. It's all about the experience. So how about we now go to Trading View, show you how I do that in the chart, and you'll have a full understanding of how I approach my days. Now we're going to take yesterday's price action. So today is Tuesday. This is Monday. I'm going to go because I was involved in this price action and I followed the same trading plan, and I'll show you what I got. And you'll see that we're actually following the trading plan exactly the way that I taught you. Okay, so looking at the 4-hour time frame, for example, what we can see happening at this time. So this is the 21 candle. So okay, that's the end of the Asian session. Now what happened here is we actually had a fair value gap and we pushed higher from, we broke structure here. So that's the recent breaker structure. I don't count this as a high probability one because the range here was too big and then the breaker structure is small. So maybe this is not a valid breaker structure, but we can still look for another push to the upside after. But what we can see here is what? Price actually created this fair value gap. Price came to it. Asian low is being around here. We have this 17 candle. So we're going to go to 15-minute and mark our daily candle and midnight open levels. Now, what do we have here? What is this? A lot of people would say that this fair value gap is now already mitigated. That's a big mistake because it was not fully filled. Price could actually come back to this level. And if you have seen my way of trading, or if you have seen any of my strategies, you would know that this is really a high probability liquidity level to long from. Okay, so that's my first level here. Now looking at the other levels that we have, we have some far levels here. For example, this fair value gap with this high inside, that's another level. This is a bit too far, but we have this one that is close. This one is a previous 4-hour high. And if we go to daily time frame, because I said you could actually go above or below that 4-hour time frame. What we see here is what? You can actually see that we have this high that we marked, but we have a lot of highs here. If you can see, we have this high as well as this one, as well as this one here. Those are all low resistance liquidity. Price could actually go above them all. And what do we see above them? There is actually a clear fair value gap being around here. So that's what we're looking for, is price maybe in the next day, maybe in the same day, to go up here and then react lower. That's the plan for the day. So that's what we're expecting. Now let's go to the time-based levels. So back to 15-minute time frame. What do we see first? Let's mark the Asian range. Now I have a problem for this day. The Asian range is being around here. You see this is the blue one, but there is a problem here that is put right here. So 20 from here to midnight. That's our Asian range. This is the low and this is the high. Now where is midnight open in this case? Midnight open, you see this is the midnight time. This is the midnight open, the opening of the midnight candle. That's one here. Now I could put this on another color, for example, let's say blue. This is the midnight open level. Now also the same thing for the 17 candle or the daily opening candle. You see, this is the one here. So we are above both. We have this level here, which is the fair value gap, below both levels. In this case, it's going to be deep discount in this case, and it's a very nice level to look to buy, right? Because it's below midnight open, below the daily candle open. Now we're going to play the price action, see what happened. You see, we reached that level, the Asian low here, and then the fair value gap or the inducement of that fair value gap. And what we have here is what? This is last bearish candle, closing above. That's a CISD. This is our order block. We can actually enter based on this 3 candle pattern. If you're not aware of, I have a full trading plan based on the 3 candle, or we can enter of the order block. So that's what we have for now. A limit order at the order block, stop loss goes below, and then targeting the high, playing the price action. Price actually gets very close to that level, no entry, and then price going up. So you could have went to 5-minute time frame here, look for 5-minute fair value gap if there was one. But you see, we actually started going up to our liquidity level. This one we missed a trade, but we were in the right direction. Playing the price action more now, we are above the midnight open and the opening of the daily candle, and we are also above the Asian session. So we're sweeping the Asian session and we're going up. Let's see if there is any confirmation, and what we get here is a creation of an order block as well as a fair value gap. So zooming in, what we could do is entry at 50%, stop loss goes just above the high, and then targeting any other liquidity level. So let's say we're taking 3 to 1, and at half of this we go break even. So we get triggered here, and then price goes lower, maybe break even. Yeah, there is this point of interest here that I was more interested about. And why? Because this level here was not aligned with a high probability 4-hour level. We might get some reaction of it, but it's not going to be the best reaction. However, this one here, that's the level that I was engaging from. See what happened? Same confirmation here, either a creation of a fair value gap. you see we create fair value gap here and then a very small fair value gap here. What you could do is, because this one is very small, I think price will disrespect it. We got this one here, where to enter from. We got this last bullish candle before price dropping. It's aligning with the fair value gap. That's an entry that is valid. Stop loss just goes above the high, and then that's the opposite actually. So we're gonna do it again. This is a short position here. Stop loss goes above the high, and then targeting any other liquidity levels. For example, this low here is an important low, as well as the London low, and that's another trade. So price hitting that entry and then keep going lower. So at this point, you're already taking partials and going break even, and price is actually approaching that level. So you're already taking some partials because price reached 3 to 1 already. So you can always avoid those entries here, even though you get some profits, but it's not as good as those ones because those ones are aligned with the 4-hour. Those ones are not. We always want to be aligned with a 4-hour because that's where the most expansions will be, and that's where we can actually catch big part of the expansion of the daily candle. So that's it for today's video. Hopefully you guys learned something new. That was just a quick video about how I trade, what is my trading routine, because a lot of people ask me to. Anyway, that's it, and I wish you the best.